Welcome to my channel. Please like, comment, and subscribe. Today we are going to talk about hazard insurance. So what is hazard insurance? To qualify for a mortgage for a home, you will need hazard insurance, which is part of a homeowner insurance policy. Hazard insurance covers the structure of the house. It is important to keep in mind that this insurance, also called dwelling coverage, is a subsection of your homeowner's insurance and not separate policy. The next discussion is what's covered by hazard insurance. Here are 16 hazards or perils commonly covered by hazard insurance. The first is fire and lightning, and then windstorm and hail, volcanic eruption, explosion, smoke, weight of ice and snow, riots, aircraft, vehicles, vandalism, theft, falling object, an accidental overflow of water from household appliances or heating, plumbing, air conditioning system, or sprinkler system that put out fires, freezing of household appliances or heating, plumbing, air conditioning systems, or sprinkler system that put out fires, and then accidental cracking, burning, tearing of heating, plumbing, air conditioning system, or sprinkler system that put out fire, accidental damage due to short circuiting of an electrical current. If one of these problems damages your property, the hazard or dwelling portion of your policy will cover the repair cost. In general, hazard insurance will cover only perils that are listed in the policy, but a standard homeowner policy called an HO3 will cover all problems that damage your house, except ones that are specifically excluded. Hazard insurance requirement can differ by lender and by location. For instance, while wind damage is usually covered by homeowner insurance, in some coastal areas, it may be excluded from a home insurance policy. If your hazard insurance excluded windstorm damage or your lender requires it, you will have to buy a spared windstorm policy. And then what's not covered by hazard insurance? There are certain things that hazard insurance will not cover, such as damage to or theft of personal property, injuries that occurs on your property, mold damage, damage from flood or earthquake, personal property and liability are included. Though, in a standard home insurance policy, mold damage can be covered if it is caused by a peril covered by the policy. Floods and earthquake are not covered by homeowner insurance. You can buy flood insurance from the National Flood Insurance Program or private insurance. You can pay to add earthquake insurance as well. And then the next discussion is about how much hazard insurance do you need. You should get enough hazard insurance to cover the cost to rebuild your home. And this is called a home's replacement value. It is not the real estate market value of your home or the price you paid for it. Your insurance agent can help you determine the amount of dwelling insurance you need based on local construction costs. I think that's all the information that I can share to you. I hope that can help you. You can also find another topic in another video that maybe you need the information. And if you find it hard to find videos or articles about insurance, you can find any information in this channel. I hope this can help you, and thank you so much for watching this video. Don't forget to give like, comment, and subscribe to this video. Welcome to my channel. Please like, comment and subscribe. In this video we are going to talk about what is gap insurance. Gap insurance is optional auto insurance coverage that helps driver whose car loan balance is more than what their vehicle is worth if it is totaled. And then how does gap insurance work? If your vehicle is totaled in a situation covered by collision or comprehensive insurance, the maximum claim payout from your insurers is the value of the vehicle right before the incident. Gap insurance, sometimes called loan or lease coverage, covers the difference between what you owe and the value of your total or stolen vehicle. Here's how a typical gap insurance claim works. If your car gets stolen or totaled in an accident covered by your car insurance, you make a claim on either the collision or comprehensive insurance portion of your policy, whichever coverage applies. Your car insurance company pays you the actual cash value or ACV of your car minus your deductible. For example, if your car is worth $17,000 and you have a $100 deductible, your insurance payment would be like $16,500. If you owe more than your loan or lease, then the insurance payout for the value of your car, gap insurance will pay the difference. For example, if you owe like $20,000 and the ACV is $17,000, your gap insurance will pay like $3,000. If you don't have a gap insurance and outstanding balance of your loan or lease is more than your car's value, you'll be responsible for paying off the loan yourself. Some lenders or leasing companies might require you to carry gap insurance. That is because it helps protect them from buyers who walk away from a loan or lease if the car is totaled or stolen. And then some gap insurers might cover you for the total loan balance, including negative equity rolled into your new car loan. For example, if you trade in a car on which you owe more than its worth, that negative equity is rolled into your new loan. However, not all gap insurance policies will cover negative equity, so make sure you buy a policy that does if you roll negative equity into your new car loan. And then what doesn't gap insurance cover? Here are some common expenses gap insurance doesn't cover. Your car insurance deductible, overdue payments and late fees on your car loan or lease, security deposits, extended warranties, carry-over balances from previous loans or leases, lease penalties for high mileage or excessive use, and then charges for credit insurance connected to the loan, a down payment for a new car. And then the next discussion is about, do I need a gap insurance? Whether you need gap insurance depends on how much you have left on your car loan or lease and what the vehicle is worth. Here are some common situations where gap insurance may come in handy. You lease your car. You took out car loan of 5 years, like 60 months or longer. You financed most of the car and made a small down payment of your car of less than 20%. You rolled negative equity from your last car loan into your new car loan. Or make sure you get a policy that covers negative equity. And then you bought a vehicle that depreciates in value faster than other vehicles. More on that below. If you currently have a car loan or lease, you can compare the value of your car on websites such as NADA guides to your car loan and lease balances. The difference between the two is the gap. But once the amount you owe is less than your car's value, or only a little more, there is no reason to keep gap insurance. That is because there will be little or no gap insurance payout possible. For example, if you owe like $15,000 and your car's ACV is $17,000, there will not be a gap if your car is totaled or stolen. And if you sell your car, you should cancel your gap insurance. Thank you so much for watching this video, guys. I hope you like it, and I hope this will give you an information that you need. Don't forget to give like, comment and subscribe.